Hello, everybody. Welcome to the 50 States in 50 Days series. I'm Dan Lucas with Credo, and today we are on day 33, and we are going to talk about the 33rd state admitted to the Union, which is Oregon. And Oregon was admitted to the Union on Valentine's Day, actually, February 14th, 1859. Now, I don't know if any of you are old enough to remember this. I know there's probably a lot of people old enough to me to remember the game, but a lot of them maybe haven't played it. I got to play a game called the Oregon Trail on the Apple II when I was in school. So I'm obviously dating myself, but I don't think I ever used the Apple One, but I definitely used the Apple II. And the Oregon Trail was like blazing cutting edge technology, and it was actually really fun. And basically it was also very grim. So you basically travel out to Oregon, and I guess it's probably the 1800s, and you could die basically. I mean, you try to make it out there alive was kind of the game, and you would die from disease or Indians or all that kind of stuff. And but I mean, at the time it was really cutting edge and it was really fun. So it's funny when I think about the state of Oregon, I think about a lot of things, but that was just one of the things that came to mind as one of those unique sort of experiences that we all kind of have that certainly dates us. So you might be familiar with the game, but I think it was geared towards someone of my sort of specific age when I was in grade school, really young. It was probably 1981, 82, something like that. So anyway, let's talk about tax credits. So Oregon, I'll be honest, their incentives and their tax credits are a little light. That being said, they do have some of the biggies, and they do have some good credits that if you miss, you'd be missing out on a lot of money. Okay, but they don't have a very long list, which again can be good because it's not hard. It's not easy. I'm sorry, it's not hard to keep track of all of them. But at the same time, you're not. It's more unlikely that you would be missing some credits. However, let's talk through them, and we'll see where you're at with them. Okay, so the first thing I want to talk about is a property tax abatement. Okay, and again, this is not necessarily a credit, but if you can get an abatement on taxes, it almost functions as the same thing. So in Oregon, they have something called enterprise zones, and if you've watched any of these other videos, you know that we've talked about enterprise zones a lot. Enterprise zones right now are a big federal credit. In opportunity zones, you can defer a lot of capital gains or even eliminate a lot of capital gains, and we see a lot of people doing that, and they're putting money into opportunity zones after they have a big liquidation event or a big capital gains event. And in Oregon, they actually have some enterprise zone tax incentives on the state level. So if you go into the state of Oregon and you invest and hire in one of these enterprise zones, you're going to get an exemption from local property taxes. And property taxes in Oregon are huge. Okay, so you're going to save a boatload of money there, and you're going to get you also get savings on personal property taxes. Okay, so that would be like new plant and equipment, inventory, things like that. So if you're doing anything in these enterprise zones in Oregon, you're going to get a nice tax break. If you're not getting one already that you're aware of, you need to be looking into these. There's another thing called the Strategic Investment Program, which is coined SIP, and it exempts a portion of very large capital investments from a business standpoint from property taxes for 15 years. Okay, so it's a statewide thing, so it's not an enterprise zone specific abatement. It's a statewide abatement, so you can get property taxes abated for 15 years. That is huge. So if you are in any sort of industry where you spend money on lots of property and equipment, you're going to want to be looking at this because you could be missing out on big credits, big abatements. Another one they have is the construction and process abatement, and this is for unfinished facility improvements. And it says that they're exempt from property taxes for up to 2 years while under construction. And so it has to be, so it doesn't have to be in an enterprise zone, but if it is in an enterprise zone, you can get a broader and deeper tax abatement. I don't have the details here on this form, but we could dig into that if it's something that somebody's interested in and needs help with. But it sounds like this is if you have uh, areas of your facility that could be finished out but aren't finished. I mean, I always think of, unfinished, like people's basements and whatnot, but obviously look at this from a commercial standpoint, is if you actually finish it out, you can get some tax breaks on it. And like I said, if you're in an enterprise zone, you can get even better tax breaks on it. Okay. If you have any questions about that, put that in the comments, send us a question, and I can give you more details on that. There is the food processing machinery and equipment abatement program. So, sorry. Now, this one doesn't start till 2025, but it says for 5 years starting in or before 2025. I'm sorry, it doesn't start in 2025. It has to start before 2025. So we're fine, we're in 2021 on this video. So it says for 5 years starting in or before 2025, newly operational M&E, machinery and equipment, is exempt if certified by the Oregon Department of Agriculture. Okay, so this is one of those tax credits where you have to do some homework up front, because if you read the tax code and you really think you're going to qualify and you go out and just do it and then come back later and try to get it, you're going to probably be really sorry. You're going to want to make sure to plan this in advance, make sure that the property qualifies, then put it into service, and then you can enjoy the tax incentives and tax credits. Okay? All right. So beyond just property tax, there's personal property tax and obviously real estate property tax. Oregon does have a state income tax. And there's only a couple of incentives that they have listed here. One of them is called the Oregon Investment Advantage, and this program it helps businesses start or locate new types of operations in a number of Oregon counties, and they do that by providing an income tax subtraction. And it could be that it totally eliminates the state income tax liability on any new operations over several years after they've begun. So if you start a business in Oregon and they're trying to sort of, it's almost like an incubator type push, or it's a sort of a seed capital. They're not injecting capital, but basically they're keeping capital in your business instead of taking it out. I love this program, actually. I do think they should do something like this on a federal level. I actually have something I'm working on behind the scenes with the local congressman about putting something in there that doesn't penalize businesses that are getting started up, that might have a profit year when they're trying to make up for some other years of losses before they can turn the corner. But that's what it sounds like this is doing. So if you're in Oregon and you are starting up a business, you're going to want to be taking advantage of this. So be very careful, because otherwise you might end up with tax liabilities that you shouldn't. And you're going to need that money to keep your business going in most cases. Okay. There are a lot of personal income tax credits in Oregon, but that's not what we're talking about in the scope of these videos. This is more toward the self-employed / 1099, small business owners, self-employed. Could be, large businesses for sure could take advantage of all this stuff, but typically large businesses, they have full-time CFOs and teams of accountants or treasurers and stuff that are really on top of a lot of this stuff. I'm really trying to make sure that the small business owner, businesses with 250 employees or less, maybe no employees, just one person, is aware of these credits, so to make sure that they get this money so they can keep their business going and keep the cash in the company. Okay, some other programs that they have is, let's see, they have a strategic reserve fund, and this is a discretionary tool that Oregon uses for a variety of projects. And what it is it's to impact economic development. And you have to apply for this in advance, and you have to go through a process because there's an extensive vetting process, and the governor actually makes final approval. So I think this is probably, big development type things. It could be bringing a huge data center there. It could be setting up a manufacturing plant there. So think a little bit bigger on this. I don't want necessarily to scope you out of it, but if you're but you could be wasting your time unless you're talking about doing something pretty big. So think in the millions, for sure. You're going to want to look at the Strategic Reserve Fund. They have the Oregon Business Expansion Program. And this is actually a program in Oregon where you can get forgivable loans, okay? And you can get forgivable loans that are equivalent to the estimated increase in personal income tax revenue for new hiring. Now, what does that mean? Well, sometimes when if you get a loan to expand your business, and in expanding your business you get more jobs, you can create an increase in the tax base for the state. So in other words, the state is going to have more revenue, wages, et cetera, tax, and you're the cause of that, right? As the business owner or as the entrepreneur. And so what they're saying is that we're going to forgive the loan amount that we give you that benefits us, right? So they're trying to create a win-win situation here. At least that's what my inference would be on this. So that, again, that's called the Oregon Business Expansion Program. So if you're planning on expanding your business, why not go out and try to get this forgivable loan? What's the worst case scenario? That they won't forgive it and you get a loan from a regular commercial bank? Go get this. And and also you're going to start developing some relationships there with people inside the state, which is never a bad thing. Okay, they have the Oregon New Market Tax Credit, and that is called the NMTC program. In this, it says it delivers below market rate investment options to Oregon businesses and creates jobs in low income communities. So again, this might be something you want to look into if you're in a low income area. Maybe you're in an enterprise zone. If you're already looking at enterprise zone benefits, incentives, abatements, credits, that kind of thing, you might want to look at this Oregon New Market Tax Credit. They have different programs moving along. They have different programs for small manufacturing businesses. I don't know if I know that there's a lot of cannabis being grown and produced in Oregon. It's not the only state by any means, but I just know there's a lot of activity out there because I see it just in my daily profession and what I see every day. Could be something you could look at there. I'd have to look into the fine print to see what exactly qualifies in this program, but and that's not to say that it's just cannabis. Of course, it's anything in manufacturing, but it's anyway, it's a cash-based forgivable loan for small manufacturing business expansion projects. So doesn't have any strict requirements for what it has to be necessarily. It doesn't have a lot of strict requirements for putting ceilings on it, et cetera, kind of like the Oregon Business Expansion Program we just talked about a minute ago. If you are trying to expand your manufacturing business in Oregon, look up this credit. It's worth your time. And again, that's the Small Manufacturing Business Expansion Program credit. There's the Solar Development Incentive Program, and that's a program created in 2016. It provides incentives to owners of, photovoltaic. I'm not sure if I'm saying that right. And voltaic energy systems that collect solar energy and distribute electricity. If you're in that industry, you probably know exactly what this is. But if you're not getting the incentives around it in the state of Oregon, you need to be looking this up. They have the Federal Work Opportunity Tax Credit. It looks like they're just pointing this out because it's a federal credit, but we might as well talk about it. It's an incentive to private companies that are hiring people from certain target groups. Could be like veterans, could be disabled, things like that. And if you hire them in the state of Oregon, it looks like that Oregon has set aside some people and some systems to help facilitate that process so you can get those federal credits. Okay, so they're federal credits, but it looks like Oregon is putting some money aside to help you to make that a lot easier. Okay. Again, if you're hiring people and expanding your business, you really should be looking at all these credits because you're probably missing credits in multiple areas. And then the last one I want to talk about is the Film and Video Incentive. And this is typical for lots of states. It didn't used to be that typical. But in the past, let's say, 5 to 7 years, these have become very common. And in Oregon, this is for film and video production, and they're going to give you a rebate on 20% of the production on the production's cost in Oregon, right? So goods and services, right? So it can be tangible things or paying people. It could be wages or contractor income or whatever. If it's related to the film and video industry or production, like again, it could be commercials, it could be digital content, anything in that area, post-production. A lot of people don't realize that there's a lot of stuff that goes on to pre-production and post-production. It doesn't necessarily involve a camera or actors or live footage that does qualify for this. You're going to get 20% rebate on what you spend on that. That's huge money. It can be huge money. Even if you only spend 10 grand on a commercial or something, you still go ahead and get this credit. They'll also give you an additional cash payment rebate back of up to 16.2%. They don't have the table here on what I'm reading, but anyway, it's up to 16.2%, so nothing to sneeze at, of wages that you pay to production personnel. So when they say wages, I'm assuming that excludes contractor money, so 1099 money, but includes W-2 money. So anybody on your payroll that might be working on this, and even if it's a full-time person that does other things than just this, you can carve out part of their salary, part of their W-2 wages, and assign that to this area, and looks like you can qualify for even additional credit. So you get 20% plus 16.2%, so that could be 36.2% rebate on your cost. That's huge. That is a huge amount. Okay, so you don't want to miss these. Let's see. Oh, and here's one last thing on these Oregon credits that are really cool. These are cash-based incentives. Okay, they're not tax credits in Oregon. Here's the difference. If I spend $10,000 and I get a 20% rebate of a tax credit, I'm going to get $2,000 of a tax credit that I can use against my state income tax. What if I don't owe state income tax? Or what if I spend $8 million? Well, that's a heck of a liability. So if I spend $8 million and I have $1.6 million in tax credits, do you know how much money you have to make to pay that kind of tax for 1 year in Oregon? Tens of millions of dollars, right? So not feasible. So what they're saying is that, no, we're going to give you a rebate, okay? And we're just going to pay it in cash. Okay, so basically, we're rebating money you put in. That basically makes, and if you do this on wages too, it looks like, let's just say 30% kind of on average, because you can get like 36.2% when you factor in wages, and people on payroll, that's a lot of cost. If you can film there or do some, the video production work in Oregon at 70% of the normal cost you could do somewhere else, that's huge. Okay, that's a huge cost savings. What if you're trying to raise money to do some of this production? Okay, tell your investors about this. Tell them you'll give them the rebate right back before you even finish the film, and they start to. So if you're raising $10 million, let's say, to do a film, which is very common for like an independent film, if you do it in Oregon, you can get a rebate back, and you can give money back to the investors of the rebate, or you can divvy that up, or you can say, hey, look, I'm going to give you 100% of the profits from the video. I just want to get the rebate. That's going to be my compensation, or that's going to be my share. I get the rebate back, and you guys get 100% of the profits. That's kind of a compelling proposition. So if you're in that industry, or if you're looking for somewhere to film, Oregon's interesting. I don't see this type of generosity as far as this type of credit and incentive in other states. So, if I was doing something large in that industry, in that business, I would be looking at Oregon. Okay. And if you want more details on that or more information, please send us a note, send us a comment, let us know. We'll be happy to look it up for you. Okay, so that's Oregon. I'm going to finish up. I didn't think this was going to take 20 minutes, but there were a few things to talk about. Thanks for watching the video. I appreciate it. And tomorrow we are going to talk about the next state admitted to the Union, Kansas. So until then, have a great day. Thank you.